Investing in real estate can make you rich or leave you broke. The difference? Avoiding the mistakes most people don't even see coming. If you're thinking of buying an investment property in Montreal, this video might save you thousands. Hi, I'm Aguinaga from Realties here in Montreal. I've helped hundreds of buyers and investors, and I also own over 75 doors and manage more than 220 doors in this area. I don't just talk the talk, I walk the walk. I've seen people succeed, and I've seen them crash hard. That's why today we're going deeper into the real estate investing mistakes you might still be making in 2025. Stay until the end where I tell you how to avoid all of these mistakes. Before we get started, a big thank you to Club Atwater for hosting us today. Whether you're looking for fitness, squash, pickleball, badminton, or simply a vibrant social community in the heart of Montreal, Club Atwater is where it's at. Don't forget to consider them for your next big event and check them out at clubatwater.ca. I've been a member here since 2022 and I absolutely love it. You're always gonna catch me at least 3 times a week here playing some pickleball, badminton, or working out in the gym. Now, let's dive right in. The first mistake I see investors make is buying without understanding the financing realities. It's not just about the interest rate. Many investors assume they can qualify for more than they really can. Multifamily lending often comes with different down payment requirements, stricter debt ratios, and higher reserve expectations. And if you're relying on future rent to qualify, make sure your lender counts it. There are many different strategies to maximize your financing options. Send me a message to discuss your particular situation. I always recommend you speak to a mortgage broker early before looking at properties. Understanding your actual borrowing power will save you from wasted time and costly mistakes. It will also allow you to be taken seriously by prospective sellers. The next mistake I've seen is overleveraging during low interest rate times and now paying for it at the time of renewal. Many investors bought at 1.5 to 2% interest rates and now face a renewal at 4% or higher. The problem? They maxed out their debt capacity back then and they didn't leave room for rate hikes. Now their cash flow is gone, or worse, they're bleeding monthly. What to do? Always run stress test scenarios. Ask yourself, would this property still work if rates went up 2%? If the answer is no, you're taking on too much risk. Now, the bank does this on their end, but I've seen a few investors purchase properties while still having employment income. After a couple of years, they leave their jobs because they want to focus on real estate and they can live off of the cash flow their properties are generating. And then mortgage renewals come around and boom, they're left without cash flow. Now they have to find a job to maintain their lifestyle and they feel like they're taking a step back. The reality is they were never ready to take that step forward. This next mistake is one of my biggest pet peeves, skipping inspections in bidding wars. Look, the competition is real, but so are the risks. Waiving your inspection contingency might win you the deal, but you could inherit major problems. Think foundation issues, mold, illegal work that needs to be undone. Beyond all of this, in Quebec, if you waive your inspection condition, you're effectively waiving your legal warranty. That's a huge price to pay in order to lock a property up. Unless you're a very experienced investor, contractor, or developer, it's simply not worth the risk. We've also sometimes brought a contractor with us to the walkthrough before making the offer in competitive situations. This allows you to gather a bit more insight on the property before submitting your offer. If ever you do choose to waive this contingency, make sure you budget for the potential issues that might be revealed once you're the owner. Next up, underestimating tenant management challenges. Real estate investing isn't just about buying, it's about operating. And managing tenants, especially in multifamily properties, can be emotionally and legally draining if you're not prepared. Missed rent, late night calls, lease misunderstandings, it adds up. Here's what you need to do. Educate yourself on Quebec rental laws. Screen tenants thoroughly. And don't hesitate to hire a property manager like Plex Doctor if you're not ready to take on the landlord role yourself. Tenant management is one of the most important parts of the business. Happy tenants stay at the property longer. Less turnover means more money saved by you. The longer tenants stay at a property, the greater ownership and pride they take in the property. This mistake has gotten a lot of investors, assuming appreciation without cash flow. Too many investors bank on the idea that their property will appreciate, even if it's losing money monthly. That strategy only works in rapidly appreciating markets, and even then, it's risky. We saw people in Toronto in despair after the 30% market correction. Talk about feeling like everything's on fire around you. Ouch. Montreal has grown, but if you're breaking even or worse each month, you're vulnerable to shifts in demand or interest rates. Make sure the numbers work now. Your property should cash flow from day one, even modestly. Appreciation is a bonus, not your exit plan. Now, In some cases, I will support a property that is not cash flowing as long as we have a 12-month plan to turn it around. The reality is, sometimes the best optimization opportunities are not cash flowing on day one, and that's okay if you have budgeted for this and you have a clear plan to turn it around quickly. Now, how to avoid these mistakes? The best way to avoid these traps: work with a team that's done it before. At LJ Realties, we don't just sell real estate, we invest in it. That means we guide our clients through every decision, every risk, and every strategy like it's our own money on the line. I use the same philosophy with our property management company, Plex Doctor. Want to avoid overpaying? We'll run the numbers with you. Confused about tenant laws? We'll explain the real risks. Not sure how to structure your next deal? We'll help you build a roadmap. Mistakes in real estate are expensive, but they're also preventable. If you're ready to invest smarter, let's talk. Book a call with me or one of our brokers using the link below. And don't forget to subscribe, hit that like button, and drop your questions in the comments down below. Whether you're just getting started or ready to scale, we're here to help you build real estate wealth the smart way. Thank you so much for watching. Catch you on the next video.